Imagine waking up to discover your neighborhood grocery store closed down, no explanation, no warning. That's what lots of Americans are waking up to today. Kroger, the nation's largest supermarket chain, recently made the announcement that it would be closing several store locations throughout the nation. These store closures are more than an isolated incident, more a reflection of the much broader transformation of the retail and grocery industries. Customers are in shock, communities are worried, and investors are observing. But what's really happening behind the curtain? The main explanation Kroger has provided for these store closures is poor performance of some stores. Simply put, they are no longer profitable. Increased operational expenses, labor shortages, supply chain challenges, and rising competition from discount and online stores such as Walmart and Amazon Fresh have conspired to make it almost impossible for some Kroger stores to thrive. It's the old adage of evolution in business, only the fittest places can survive. But wait, there's more. Behind the scenes, Kroger is also having a huge restructuring to maintain its lead in a post-pandemic environment. The company is significantly investing in automation, online ordering, and fulfillment centers to address evolving customer behaviors. With customers increasingly favoring online grocery delivery and curbside pickup, the core in-store experience is becoming less of a focus for Kroger's growth plans. Another contributing factor to the store closures is the current labor tension. Some of the closing stores were in areas where workers had been demanding more pay and improved working conditions. By closing these stores, Kroger not only saves on operational expenses but also sidesteps any union-related costs and negotiations. It's a contentious decision, and it has ignited criticism from labor activists nationwide. For investors, the news is good and bad. It is good in that paring out underperforming stores is a rational business move. It is more concentration in high-margin stores and effective allocation of resources. It is bad in that it foreshadows destabilization in the conventional grocery model. As e-commerce expands, conventional retail chains such as Kroger have to tread very carefully between innovation and disruption. Neighborhoods are also suffering. Several of the stores closing are in low-income neighborhoods where access to fresh food is already restricted. Kroger's exit leaves what planners refer to as food deserts, communities with no access or very limited access to healthy, affordable food. For residents, this is not just an inconvenience but a crisis that permeates daily life. Business strategy-wise, Kroger's move is part of an emerging trend in retail, consolidation, and updating. Rather than having a sprawling chain of in-store locations, the company is turning to more intelligent, more profitable models. That includes tie-ups with third-party delivery companies, upgraded mobile apps, and sophisticated data analytics to anticipate shopping habits. Down the road, Kroger's future will be a function of how it adjusts. The grocery business is evolving quickly with technology, consumer behavior, and economic stress. Companies that innovate and simplify will succeed. Companies that refuse to change models will lose ground. Kroger appears to get this and is making dramatic, though painful, adjustments in order to remain current. The Kroger store closing story is not merely one of business choices, it's one of a transforming America. It is a mirror to the way that economic necessity, consumer behavior, and company moves are redefining even the most routine aspects of our existence. Grocery shopping, that mundane chore, has become an arena of efficiency, technology, and subsistence. Ultimately, Kroger's move could fortify its long-term position. But in the near term, it raises more questions than answers. Will other big chains follow suit? What becomes of the communities impacted? And how will this change shape the future of food retailing in America? Only time will tell.